good evening, everybody. This is class for tonight, for today. Okay, and don't forget where we're coming from. You know, after we talked about using, we talked about to trade different kind of markets, and I told you there are three markets that are tradable, three market structures that are tradable: the uptrend, the downtrend, and the ranging market. You have done enough, in explaining how this kind of market looks like. This is where we're coming from. And then we started talking about how to trade the trending market, whether bullish trend or bearish trend, which is quite different from trading a ranging market. Different from trading a ranging market. So we said in a bid to trade a trending market, these are the strategies to use to trade trending market. We have talked about the EMAs, the exponential moving average, and we have seen the power of that strategy in trading a trending market. Because you see, the junk part of the moment, the junk part of the time market trends, and I've given you examples of instruments that stay trending the most in the market. I'm telling you, why am I taking so much time explaining this? You see, there are people that they are trend traders. They have mastered the strategies of trading trending market. They may find it a little bit difficult in trading ranging market, but then they have mastered trading market. And there are other people too that have mastered trading ranging market. But I'm giving you an edge. I want you to understand both perfectly well, so that wherever the market turns, you can still maneuver your ways and make profit virtually all the time. So we have the exponential moving average, which I've explained to you, and we have done, you spent quite some time on explaining it, and I believe it is clear to everybody. We were talking about the exponential moving average, the EMA 10, the 50, the 200, the 200. Then we also talk about the ADX, average directional moving index, and we have done enough explanation on that. We have taught it. Everybody understood it, no doubt, because I've seen reports in the DMs of how people are saying, "Oh, it's very powerful." They were wowed about how much opportunities the ADX, even combined with EMA, can bring to their lives. So another thing I want us to look at, that we'll be looking at since yesterday's trend line. Trend line is a tool, is a powerful tool that can give you an edge in trading financial markets. And then later, probably from tomorrow, we're talking about trend line breakout, then we'll go to Fibonacci. But today, I still want to go deeper in talking about trend lines, talking about trend lines. Now, first of all, we have upward trend lines, and then we have the downward trend lines. We have the upward trend lines, then we have the downward trend line. We have the upward trend lines, then we have the downward trend lines. When the market is forming series of higher high and higher low, it's said to be an uptrend, and we'll be using uptrend line, when the market is trending to the upside, so that we can join the upward movement. Then we have the downtrend. Then we have the downtrend in the market. We have the downtrend in the market. And then but there are a few things that I also want to remind you concerning trading with trend lines. I told you it's very simple. Trend line is very simple, but there are rules. It follows. Trend line is very simple. Whether upward trend line or downward trend line is very simple, but it has rules. And what are the benefits of trading with trend lines? Number one, it's very simple to use. Very simple. You don't need any configuration, and it is manual. You do it by yourself. You do it. You do it with what you see on your chart. There is no special technicality, just a little carefulness. Nothing ambiguous. Nothing so difficult to use a trend line. But then just do it carefully, and then it provides high probability and high accurate setup. I love trend line so much. It gives you access to early entry. It gives you, you are entering the market right from the very first peep, so to speak. Right from the beginning of a trend, and you can ride on it for a very long time. Okay, it is price driven only. I told you you don't need the additional indicator. Just very simple too. It works on all time frame. It works on all time frame. Depending on what kind of trader you are. Are you a scalper? A scalper will use trend line on lower time frame. Are you a day trader? A trader will use it on a little bit higher time frame. You see, why a scalper using 1 minute and 5 minutes? A day trader will likely be talking about 5 minutes, so I mean 50 minutes rather, and a 15 minute, 1 hour, and 4 hours. Then talking about a swing trader who will be focusing on 1 hour, 4 hours, and daily time frame. So it's important. It's important that you understand that. And two, it works on all time frame. It works on those currency pairs, indices, stocks, and all like that. So we have the upward trend line, we have the downward trend line, and then how do you find trend line tools? Trend line tools, if you are using phone and you're looking for trend line tools, so when you after you have opened to the charts, your just tap the screen, you will see a circular ring that comes out. Then you see shape on your screen. Just type that place where you're seeing combination of shapes that are interwoven. Just click on it, you will see trend line there. And also talking about the common mistake that people make in drawing trend lines. Common mistakes. And sometimes people draw trend line, and just because they just want it to fix into the market. Don't try to fix trend line into the market. Let the market fix itself into the trend line. Don't try to fix it. Don't try to, especially point one and two. There must not be any obstruction. It must be very clear. It must be clear for everybody all over the world to see. There must no ambiguity about it. It's very simple. So let there be no obstruction between the point one and point two. Then draw trend line through the candlestick wicks. It is not acceptable. It is not acceptable. As far as me, I'm concerned in my own strategy, I don't draw trend line through the wicks. Just let it touch the wick. Let it touch. The touch is okay. Then draw trend line that are not touching the peaks and troughs. Some people you just far away. If it's far away, you will miss your entries. There must be pinpoint connect. Pinpoint connect. Pinpoint connect. I mean pinpoint connect, you know, of two peaks or troughs. So the trough that you are connecting, they must connect at, there must be a pinpoint connection between them. No passing through the wick. It must touch, just exact touch. Then keeping already brief trend line and not drawing a new one is not a good attitude. Also, it's not a good attitude. Also, okay. Then we're talking about how to draw trend line now. Identify the obvious peaks. The word obvious is important there if you are trading currencies, trading popular currency. Obvious. That means you want to be seeing what everybody all over the world will be seeing. And then what you are trying to see must be something clear to everybody. Obvious troughs, obvious peaks. Connect the minimum of two obvious peaks with a line from left to right. That is the downward trend. Then you connect two minimum obvious trough with a line from left to right. That is an upward trend line. So it's very, very important that you understand that. Very, very important. And two, you know come to somewhere like this, you will see by my left here, you see trend line is, you just draw trend line, just like that. It's just like that. I'm drawing the upward trend line, I'm drawing the downward trend line. It's just very simple with a very powerful tools. Very simple, very simple. If you draw it carefully, it will give you hedge and several advantage and trade opportunities in the market. Very, very important. Okay, so that is where the tool is in your on your compute on that's where the tool is. You're on trading view now. Trying to put on trading view here. It's loading. Then on trading view you have the tools. The tools is where left also. Then you have, you know, you have these tools as this is trend line. This is trend line. Okay, that is trend line. That is trend line like this. It's a little bit different when you draw it on the trading view, because you just touch the location where you want to touch. You don't need to drag it so much like we do in MetaTrader. And then another thing is that there is particular tool that I like. Anytime I'm using trading view, it's called Ray. I click like this, point 1. I click like this, point 2. And it goes straight into the future. It goes straight into the future, and then it shows like that. Then it shows, it shows like that, It just, it's called Ray. It's called Ray. It's called Ray. It's called Ray. Now, let's get back here. So, I want to show you a couple of examples on some instruments. Currently, I'm on GBP USD. Now, I think there's upward trend, there's downward trend line, and I'll show you where to pick the tools. Okay, where to pick those tools. Now, another thing I wanted to, I don't know if I said this one yesterday. I said the more the trend line is steep, the less it can be trusted, the less you can trust it. If you see a trend line that is steep like this, price is not likely to obey it couple of times. It's not likely to obey it. Price is not likely to obey that trend line when it's steep. But the more gentle the trend line is, the more trustworthy it can be. The more you expect that the price is going to be bouncing. For example, this steep trend line is going to be useful tomorrow when it's very steep. Don't worry. What I'm going to be, make sure you don't miss the class tomorrow. The steep trend line is what we, it is an advantage when we come to when we come to the strategy that we're going to be start discussing tomorrow. But on bounce, we have two type of trend. We have two type of trading ways of trading trend lines. The trend line bounce and the trend line breakout is already what I was trying to discuss. What we're talking about here. We're talking about in this place. I have trend line and trend line breakout. Trend line breakout is what we're going to start discussing tomorrow. It's a very powerful, instrument that that you're going to love. You're going to love it. So I'm here now. I'm here on 4-hour time frame. That's another thing I wanted to, say I was going to discuss with you, and we already discussed it. You can draw trend line on all time frames, and then basically I draw trend lines on three time frame, on 4 hours time frame, on 1 hour time frame, and on 15-minute time frame. Those are the three trend lines those are three time frames on which I draw my own trend lines, and the most powerful of them all is the 1 hour time frame. 1 hour time, draw your trend line on 1 hour time frame. It is amazing. It's give you more trustworthy setups, accurate, trustworthy setups in the financial market. So it's very important, very, very important. And so, like I was saying also, that on your point 1 and point 2, there must not be obstruction. There must not be obstruction. There must not be, you cannot draw trend line, like this. You cannot draw it to pass. Don't let it pass the week. Let it just be touching the pinpoint touch of of the point, especially point 1 and 2. Point 1 and 2 must give you pinpoint touch. So you have my point 1 here. then I have my point 2 in this place. I have my point 2 in this place. I have my point 2 in this place. So point 1, then point 2. Then I start looking into the future to see where there will be a reaction. Okay, where there will be a reaction in my favor, or where there will be a reaction, then I enter the market in a direction that I'll be expecting the market to favor me. So this is 4 hour time frame. I've drawn this trend line on 4 hour time frame. So that watch, I'm using these two peaks. These two peaks. Don't forget what we said the other time. Don't forget what we said the other time. We're talking about how to draw, you know, how to draw trend lines. We're talking about, identify obvious peaks. Obvious peaks. These ones there, these are obvious peaks. For example, I'm already saying, why am I going to be drawing the number one? The market has been going up from here, going up from here. All of a sudden, the support is broken. This support is broken. When the support is broken, then I'm seeing my peak one, I'm seeing my peak two. I can literally join my P1 and P2 and watch what's going to happen in the future. What's going to happen in the future. So I'm seeing something like this. But when the price get to this place, price broke this trend line, but we discovered that the next candle came to close inside that trend line. When you see something like that, it's an indication to enter, is an indication that the market, is obeying the trend line. Is obeying the trend line, because what we are looking at is whether the market will obey the trend line or break out of the trend line. For example, now I'll switch to lower time frame. That means if you look at this in lower time frame, you discover that we already have an entry. We already have an entry at this spot. On 4 hour, this is not visible. It's not visible. I'm going to be entering my sell here, and I'm going to be entering my sell here. Enter my sell here. So then you can see how far the market moved. Market moved a great deal. Okay, let's say I enter the market from here, and then I'm having on GBP USD, I'm having 229 pips, and that's amazing. 229 pips in how many days? 229 pips in 18, then in 2 days. In 2 days, 280 pips in 2 days. And that's amazing. That's amazing in 2 days. Okay, and so then, but as we come into the future again, I'm seeing that here now price is broken, and then it came back inside to to close within the trend lines, within the trend line that has been drawn from two peaks from left to right. Okay, so here now I'm going to be entering a sell because the candle has come back to close within the trend line. The trend line, that means you still want to obey the the we want to obey the trend line by the market going in the direction of the main trend, So from here now, I'm having how many pips? I'm having plenty pips. Let's say it ends here. I'm having 346 pips. 346 pips. And so we go again into the future. I also see something like this. I have my point 1 here. I have my point 1. I have my point 1 here. Then I have my point 2. I have my point 2 here. Then on the third touch, definitely I'm going to be switching to 1 hour or 15-minute time frame, because you see, if I analyze on a higher time frame, my entry is always on the lower time frame. And look at it here. Look at this candle. This is one of the things I'll be teaching you in a couple of days to come, how you can use reversal candlesticks to determine your entry and exit from the market. Look at this candle now. We call this candle long-legged doji. Long-legged doji. This is kind of the candle that you find a certain zone in the market that can give you a pointer to that, whatever the current trend is getting exhausted, and the market is preparing to move in a reversal, ready to move to the opposite side. So because this has been coming like looking bullish All of a sudden it got to this trend line, then it's exhausted. It is forming a doji candle. When you form a doji candle at that spot, what that is telling you is that the energy that is pushing the mark to the upside is getting exhausted, and then it must go down. That the price must go down, and those are the things that you look at. Okay, so we are seeing that at the third touch, okay, we are seeing that at the third touch, at the third touch in this place, market is set to move to the downside. Market is set to move to the downside. Market is set to move to the downside. And by how many pip is that? By how many pip is that? Then we have the 67 pips. 67 pips. 67 pips. So let's move further again and let's see, other examples are already marked out for you. Okay, so I'm having this 0.1, 0.2, 0.3. 0.3 here, we're supposed to sell. But then if you move the price to a lower time frame, let's see if you can escape loss on this particular setup. Let's see if you can escape loss. Escaping loss, you can see now, when this bearish engulfing is formed, is one of the candles I'll be sharing with you later in the course of this training. When this candle is formed, this candle is a pointer. I was telling my other students in the other group that anytime I see this kind of candle, I don't wait for any further confirmation. I don't wait. When I see bearish engulfing candle, I don't wait for any further confirmation. Bearish engulfing candle in itself is the confirmation. Okay, and so if I've entered here now, at least I will have come up with a couple of pips from this market. I will have come up with a couple of pips. I will have come up with at least 20 pips on this trade. 20 pips on this trade. Okay. Then here you can also see that this trend line is very steep. The trend line here is very steep, and market cannot sustain. You can see that it only is only obeyed once. It's only obeyed once. Okay, let's say it's more than once, or I think twice. Is obeyed twice. Is obeyed twice. So I have my 0.1 here. I have my 0.1 here. Then I have my 0.2 here. I have my 0.2. I have my 0.2 here. Then I have my entry. I have the first entry is here. Then I have the second. I have the second entry. I have the second entry in this place. So I'll have entered the market twice. On this swing now. Then I have, if I'm entering from here, how many pips do I have in profit? I should be having 93 pips in profit. 93 pips in profit. Then we also see something like this. I also see my 0.1, my 0.2, my entry. My entry is here. You can see the amount of pips I'll be able to amass, on this kind of trade. So then I'll be having second point. Then my entry is supposed to be here. My entry is here. But how many pips would I have won? How many pips would I have won? That's 116 pips. 116 pips, and that is remarkable. Look at something like this again. This is, now we're talking about Euro USD now. This is February this year, 2025, and then you can see 0.1 is in this place. 0.1 is in this place. 0.1 is here. Then we have 0.2. I have my 0.2 here. I have my 0.2 here. Then now we're having my entry. I have my entry here. I'll be having my entry in this place. Then I'll be having another entry in this place. Okay, I don't know if I'll be having entry here except it's drawn again. Okay, so I'll be having entry 1, entry 2 then market is going in my favor. Okay. So I'll be having to look at it here too. This is my entry will be on the third touch. My entry will be on this third touch. I have my point one, I have my point two. And if I take this thing to a lower time frame, what are we going to be seeing there? What are we going to see on a lower time frame? What are we going to see on a lower time frame? So I have this particular reversal candle. This is one of the most interesting, reversal candles. One of the most interesting reversal candles, which I'm still going to be teaching you in this your class. I have like 20 candles to share with you. Okay, I'm going to be starting from the first one, then we take it through to the end. Okay, so I'm having this candle. Anytime I see this candle on a resistance like this, on a downward trend line like this, at this kind of, it is candlestick that can be trusted on this kind of high time frame. Okay, so I'm taking my entry from there, and I'll be having how many pips? That is 90 pips. 90 pips, and that is that. That is that. So if I don't know if I have more examples. I have my examples here. I have my point one, point two. I have my first entry. I have my second entry. I have my point one on this spot. I have my point one there. Then I have my point two. I have my point two in this place. I have my point two here. Then I have this. Then I have this also. That's how trend line works. It's very simple. You can see it's very simple. It's very, very simple. Just pick your line, look for obvious peaks, two of them, join them, and let it extend into the future. Okay, and if it's upward trend line, look for obvious troughs, two troughs that are successfully higher than each other. Then you draw your line, you join the two troughs together and project it into the future, and let's see how things goes. So there's no ambiguity in trading with trend line. There's nothing is ambiguous there. Everything is clear, everything is simple, everything is understandable, and trend line is always very accurate. Trend line is always very accurate. It does not lag, it does not leave, it tells you the truth. It tells you exactly how it is in the market. There is nothing hidden. I say trend line does not lie. Trend line does not lie. So I have my first point there, and I have my second point in this place. I have my second point in this place, and I'll be looking at entry here. My entry is here, then my entry is here, and then we'll move like that. And if we switch that to the lower time frame, you discover that they are not just so many, they are not just few pips, they are plenty pips. They have 44 pips, and over here I have 75 pips. 75 pips. And that is all I'm going to be sharing with you tonight. Tomorrow we're going to go deeper. I have something very important, something very special to share with you.